In today's video, I'll talk about all the information you require regarding investment, index funds, equities, and cryptocurrency, among other things. I'll discuss the advantages of investing, when to think about it, and how you may get started. Now, the key query on everyone's mind is, why should you begin investing? All of us aspire to financial independence. Some people choose a quiet retirement where they may take in the cool ocean wind, while others desire financial security to lead luxurious lives. It is believed that if you are constantly trading your time for money, neither your savings nor your ability to become financially free will serve you. Make your money work for you if you want to keep it from becoming worthless due to inflation. Your money depreciates annually, whether you're conscious of it or not, due to the rising cost of everything else. While inflation typically increases by 2% annually, banks only pay you less than 1% return on your investments. As a result, everyone constantly loses money. On the other hand, if you had put your money in an index fund, you might have received an annual average return of 10%. The question that now arises is whether keeping your money in a bank is actually worthwhile, or to invest in order to achieve far greater financial growth. Definitely don't hold on to it. So let me introduce you to the choice with the lowest risk. Indexed funds. You might be asking, what is an index fund at this point? Simply said, an index fund is a fund, a large pool of money from many sources that is subsequently invested in significant indices, such as the S&P 500. According to their percentages as depicted on the figure, the S&P 500 and other significant indices are composed of large firms. There are other additional indices, including the FTSE 100 and the Nasdaq Composite. The finest aspect of an index fund is that, like a pension plan, it is a passive investment. You don't have to day trade and keep checking it continuously. All you have to do is keep adding to the fund, and it will eventually yield significant gains. I mean, check the statistics. Yes, the market has slightly declined, but this has always resulted in higher returns. The reason is that it depends on 500 different businesses. There are still 498 companies that will balance out your returns even if one or two of them fail. Now that you're investing, psychology is extremely important, since you need to ride the market's ups and downs. My best advice is to just pick a fund with a minimal brokerage cost, to avoid being taken advantage of. Let's move on to the second type of investment, buying stocks. This carries a somewhat higher risk than index funds. Let's imagine you have faith in Apple and believe the company will prosper financially by the end of 2023. Then you may just purchase Apple shares. This implies that you effectively own a portion of the business. Therefore, you may essentially declare, "I own Apple." Now, if Apple performs well, you will earn substantial returns. However, if Apple performs poorly, the price of the share you purchased will also decline. Now, since you're dependent on a single business, investing in rather than using an index fund is riskier. All of your money will be lost if the business files for bankruptcy. On the other hand, if your money is invested in one business rather than several, you will benefit more if the firm does well. You can receive dividend payments annually if you invest in a single stock. Let's assume Apple has a successful year, sells plenty of phones, and earns millions of dollars. You could make some more cash if they decide to equally divide the millions across stockholders. Large corporations like Apple and Microsoft do this so they may get more investors to make investments in them. Additionally, they work to encourage long-term investments because there are two different types of stock traders. One of them is the long-term passive holder, which businesses adore. Another type is known as a day trader, who merely buys and sells stocks throughout the day, moving the market up and down. There are numerous ways to purchase stocks. All you have to do is open a brokerage account. To create an account, just browse to websites like Trading 212 or eToro. You can also visit Public or Fidelity Investments for the US. Once inside, all you have to do is add some money and purchase whatever stocks you like. Do not, of course, purchase stocks without conducting a technical and fundamental study on any firm you intend to invest in. Now, if you do not know the meaning of these two words, when you do technical analysis, you examine the stock chart to determine how well the company is performing. Commonly utilized by day traders because markets can change a lot in a single day, whether it's up or down. Fundamental analysis, on the other hand, involves looking at corporate reports, news, and balance sheets to assess the company's performance and prospects for the future. Both day traders and passive investors use this analysis technique, although passive investors benefit from it more as they are only interested in the long term. Regardless of the type of investor you are, you should apply both analysis techniques since they are both significant. Before investing in stocks, they provide important information. It's crucial to begin diversifying your portfolio as soon as you begin buying stocks. Consider investing in a variety of stocks in a variety of markets. You can use other sectors that are performing well to cover up for a certain area that is performing poorly. Finally, let's discuss cryptocurrency, which will be the most popular issue in 2022. This is a high-risk but also high-reward investment strategy. For those of you who are unfamiliar with cryptocurrencies, it is essentially a form of digital money, much like the dollars and pounds we use every day, but each one is secured by the blockchain. In the realm of cryptocurrencies, Bitcoin and Ethereum are the safest choices. Since fraudulent coins are constantly being created in the cryptocurrency industry. But before you invest in any projects, make sure to do thorough research on them to ensure that they are legitimate and have some sort of value. You can register on a website like crypto.com if you do want to invest in cryptocurrency. Here is a checklist that you must complete before you start investing, even before you think about it. Additionally, there are a few crucial factors you should think about. First and foremost, before you begin investing, you must confirm that you have emergency money. Emergency fund has a spooky sound to it. I am aware, however, it is fairly easy. You should always have some cash on hand in case an emergency occurs and you need the money right away. It is advised that you have at least 6 to 12 months worth of living expenses available in cash, just in case you experience a job loss or a sudden medical emergency. That's it for today. Hope this video helps you and let us know your thoughts in the comment section. If you enjoyed the video, smash the like button and subscribe to the channel. Don't forget to press the notification bell so you are updated every time we post a new video. We will be back with another educational video.